to those of you who have joined, and welcome to the latest in a series of Pragma webinars. Having assessed the opportunities in airport and out of town in previous and forthcoming webinars, today we're focusing on the UK's major cities and how the scale and nature of opportunity has shifted through the last 2 years of COVID disruption. Delighted to say that today we're joined by our friends from Gillingham Pollard, and I'll allow Tracey to introduce both BGP and the team members when she speaks shortly. Just to run through the agenda for today, our session is to last around 40 minutes, and we are looking to provide a bit of insight into both existing performance and trends, and then also looking to present a consolidated view, taking into account our knowledge of both the consumer, the brands and the occupier activity, and also the investor as well. We really welcome your questions and comments. If you could add those to the chat box as we go through, we'll try and address as many of those as we're able to towards the end of the session. So just to introduce myself, I'm Andrew McVicker. I'm the director of Pragma's property division. And Pragma are specialists in commercial strategy. We focus on linking the consumer, the occupier, and physical space to create successful destinations. We operate globally and we cover retail, leisure, food and beverage, and increasingly involved in mixed-use schemes, including office and residential. And we get involved across the full asset life cycle, right the way through from new build, new opportunities, through to due diligence and ongoing operating and leasing support. So as mentioned, we've got BGP on the call today, and I'll just hand over to Tracey to give you an introduction to her and the team.
Hello, everyone. Thank you for joining us today. I'm Tracey Pollard. I'm one of the founding partners and MD of Gillingham Pollard. I'm delighted to be joined today by Jack Barrett, who is in our investment team, and Jamie Orme, who heads up our tenant rep business and searches for sites for retailers right the way across the UK and internationally. We believe that we have a responsibility to our clients to provide forward-thinking advice, and we're always looking at the future of what the shopping centre model might look like. And I think it's fair to say that historically it's probably been quite formulaic, and it certainly feels like it's not always appealing to the millennial, let alone the Generation Z. So we're looking forward to using our expertise, our relationships which are developed with strong central London estates, to be able to bring some very new and exciting names to some of the concepts and sites that we work with across the UK.
Fantastic, thanks Tracey. And so to start off with today's session, I just wanted to start with a bit of context, particularly around our major cities and some of the challenges they've faced during the last nearly 24 months now, as we've entered into, bounced around between various lockdowns, and hopefully, touch wood, fingers crossed, we seem to be emerging from the worst of what COVID has had to offer. Just looking at footfall by different format type, we can absolutely see the challenge that city centres in particular have faced during the last 24 months. Community centres, those sort of more local, higher number schemes, have actually been, after that first lockdown in April 20, the format that has recovered its footfall quickest. And actually from March 2021, we're seeing footfall at community-based shopping centres having actually advanced on where they were pre-pandemic. Part of that, I think, is that dynamic of more people working from home, and also that dynamic of localism, of people shopping in their local area more frequently. Town centres, to a degree, have also recovered. And by May and certainly June in 2021, had started to get back to their pre-pandemic volumes of footfall. And that was also seen in October at the end of 21 before the Omicron variant. By comparison, our city centres have really struggled on a sheer footfall volume basis. And I think there's a number of different reasons that contribute to that. Clearly, office occupancy is one of the key factors in that drop-off in footfall. I'm sure many, if not all of us on this call today are either working from home today or have been doing so this week. And that clearly has an impact on the volume of footfall that is attracted to city centres. In November 2021, office occupancy was down at 25% in terms of overall volume of people in, and actually dipped as low as 13% on Friday, the 5th of November. I think everyone probably has their own preferences about which day of the week they choose to be in the office. I think nationally, Tuesday, Wednesday, Thursday seems to be the working pattern that a lot of us seem to be working towards. But that is clearly impacting that total volume and therefore the opportunity. Additionally, city centres are hit by a drop-off in international tourism. In 2019, the UK had 41 million visitors to the UK, and those would clearly be distributed across our major city centres. That dropped off to 11 million in 2020 and was anticipated to drop as low as 7.5 million in 2021. So our city centres have clearly struggled off the back of both international and domestic tourism drop-offs during the last period. I think also as well, finally, during our lockdown period, the attraction of our city centres for shoppers who'd be travelling typically up to an hour to come to these larger centres has been diminished. People struggling to wear a mask all day, finding it uncomfortable, the need to book venues in advance to pre-plan your days out, and just a general sense of caution in terms of circulating during times when many people have been falling seriously ill, have clearly contributed to that drop-off in footfall. But being more positive and reflecting more of the position that we truly believe, I think we still see a significant opportunity from the UK city centres. First thing to say and remind ourselves is that footfall is not sales. Not all footfall is equal. And I think the drop-off in office is a clear representation of that. Office workers clearly help with the vibrancy of a city centre. They clearly help in terms of adding an audience, particularly after work. And that really works for leisure and food and beverage. But it's not necessarily the same opportunity for general retail. Through the work that we carry out and the sales data that we collect through our STAR platform, we're seeing that for every 30% drop-off in footfall, we're only seeing a comparable drop-off in sales of around 11%. So clearly that footfall is not the only indicator that shows the health and opportunity of our city centres. I think as well, without being too disparaging, whilst our town centres and our community shopping centres have returned to pre-pandemic or even exceeded pre-pandemic footfall levels, often these locations weren't working pre-pandemic. And so a return to those footfall levels is not in itself a golden opportunity. They still face considerable struggles in comparison to our city centres. And where we see the opportunity in our city centres is that even if footfall has been diminished over the last couple of years, they still represent a huge, diverse opportunity for a real range of different brands, occupiers and retailers. Positively, we've seen hotel occupancy in our city centres start to move back up, demonstrating both the return of international tourists, but also increased appetite for domestic tourism. So England's hotel occupancy rate towards the end of last year was at 71%. And what we're also seeing is our city centres remain hugely attractive places for people to live, work and play. Manchester, as an example, built 5,000 residential units in the city centre in 2020. and there were 12,000 under development and due to be opened in 2021. These city centres are places that people actively want to place themselves. And what that gives is a real diversity of audience, be that the demographic profile of people within our city centres, but also opportunities to access people at different times of the day of the week, and through events, different weeks in the year. Things like football, music events, cultural events. They're all reasons that people have visited our city centres, and we anticipate will continue to do so going forward. Just finally, on the opportunity that we see in the city centres as well, I think what we're describing as a flight to nearest best is a response to the issue that is raised around localism. Clearly, with a lot of people working from home over the last 24 months, there's been a lot of talk about engaging with independents in local town centres, the spend potential of people shopping more locally. And to a degree, we have seen that start to come through, particularly in locations that already had a reasonable to strong retail and leisure provision. However, I think typically a lot of our town centres and community shopping centres are really struggling to provide the relevance of offer that people who now find themselves working from home maybe 2 to 3 days a week are really looking and seeking. And in those cases, other than a flight to online, we're seeing a flight to nearest best. That is, maybe people aren't commuting into London and spending as much money in London when doing so, but what they are typically doing is being attracted to their nearest regional centre, because these regional centres have that range of offer, of environment, the ability to touch and feel that online doesn't provide, and that community and town centres cannot and will not provide going forward, just through the sheer lack of scale of opportunity that those locations provide. So for those reasons, we see our cities as being healthy, vibrant locations, but clearly demand has changed over the last 24 months. And so, Tracey, it'd be really interesting to pass to you to maybe help describe how you're seeing some of those changes taking place and how the brands are reacting to those opportunities.
Great, thanks, Andrew. I agree. I think that flight to the nearest best is something that we're experiencing as well. And we're seeing that some of those really large regional centres are actually getting some great footfall, and they're coming from a variety of reasons. And I suppose what we really need to think about is what is retail, and I don't think retail is all about apparel anymore. The spaces that the large retail units or department stores were taking are now being redeveloped, and we're looking at everything from residential to education to healthcare. And that's great, because all of those sectors bring people back into the city centre. At the same time, we're seeing them develop new cultural experiences, including more technology, which is great, because that really does get that sort of Generation Z coming into those sites. And also looking much more, obviously, leisure and hospitality, two sectors that we've been incredibly busy in over the last 24 months. So they're really great, because you've got your existing population, you're serving, particularly in places like Birmingham, Manchester, where there's some great demographic people living in town anyway. And then you're layering it with all these different uses. So actually, I think that it could be a very exciting time for the city centre. So we review each year a number of trends, some of the sectors that we see that are growing. And in 2022, our trend presentation includes some of the following. And if anybody would like to have a full sort of debrief on that, we're happy to do that too separately. But the topics that we looked at this year were very much about innovation and the store experience, and looking at how that is maturing. And some of the examples that we've used here are that the consumer is demanding more. They can get things super quick online, but they want to have an experience, whether that's in leisure or fitness or within retail. We're seeing it across the board, and Deloitte referred to it in a survey that they did, and a report they did about the future of the high street relies on the ability to join physical retail with experiential leisure. It's creating an environment. So landlords are definitely looking much more at incorporating in that sort of more leisure element within it. Innovation in store experience. You know, people like Vans on Oxford Street, Dr. Martens, this is their Camden store, where there's a lot more going on than just selling. And you can personalize product, you can create experiences. They do local collaborations. You can go and learn at Vans on Oxford Street, you can go and learn about or have a workshop on various different things right through the year. So there's always something going on, and that draws consumers back in. Also, I think means that brands need to look at bigger spaces. So there could be some upsizing opportunities, or they're looking at maybe just regional locations, but wanting some really big ones, because that's how they're going to attract, you know, taking your point about flight to nearest best. And then finally, we're also looking at sort of showcasing. So the Nike example at the bottom of the page is obviously, that's their New York store, I think, with, you know, the basketball court, innovations right the way through the store so that you can get personalizations. They've also created a new Unite concept, which is all about localism. So you can go into that store. I think Dunwharf will be the first in the UK, where you can actually, the shop fit is designed very much with local elements in mind. It's celebrating your local team. It's celebrating the local hero who's just, you know, made it to the Winter Olympics. It's really about embracing community. And I think that's something that we're seeing right the way across the board from some of the retailers that we're talking to. I think some of the other trends, if we can move on to the next slide, that we're seeing is a growth in homeware, and homeware coming back into the high street. So that's really interesting. We're seeing more and more fashion brands introducing homeware. So obviously there's the likes of Mango and Zara and H&M, but we're also seeing a lot more independents doing it as well. And it's ranging right the way from sort of the Primarks of this world up to the Gucci's, bringing in homeware. And I guess that's because we've all spent so much more time in our homes. They're all seen by other people in Zoom and team meetings, and Instagram and social media kind of have made it a more interesting place. So I think it's also given security during that pandemic period. Our homes were our safe places. So we probably are all open to spending more money on it. So we're seeing an interesting growth in that sector. And again, these types of brands need big spaces. They need to showcase the experience. I think Neptune do it incredibly well. You walk into a room, you may be going to look at the bed, but you end up wanting to buy the bedside table, the wardrobe, and the lighting, and because it all looks so beautiful in there, and you feel like you're in a hotel. So those experiential kind of shopping. But what I think, you know, IKEA in taking Oxford Street's a good example. I think it's great to have those showcases, but you need to back it up by your online ability, because the chances are the tenant won't be, the customer won't be purchasing from that store. They'll go in, they sit on the sofa, make sure it's squishy enough and that it feels comfortable to sit and watch Netflix for 5 hours, and then they want to go home and do it and order it online and have it delivered the next day or whenever it can be delivered. So it's really about that seamless journey. So we're seeing a big growth in that homeware, and also probably the number of online businesses in the homeware sector who have now come into high street sites. I think that's a massive opportunity going forward. So there's a couple of the brands here. Mango have got great sustainability credentials to their homeware brands. Oliver Bonus is someone who's done a lot more gifting and taken bigger stores right the way across the country, from starting from their sort of London base, 10, 15 years or so ago. We're seeing a lot of collaborations as well between fashion brands and homeware brands, and that gives good opportunity for pop-ups and white boxes. So again, I think it's about looking at what your shopping centre can provide with regard to some innovation space, so that you can attract the likes of IKEA and Off-White or Liberty and people who perhaps you would never normally get in your shopping centre, but actually might pop up just for a short period with a collaboration. If we can move into the next slide, please, Andrew. We finally, within the trends sort of for this discussion, we've highlighted the maturing of the leisure market. Fascinating sector, and quite wide ranging, from boutique cinemas right the way across to sort of activities that you can do whilst drinking. some being more aggressive with axe throwing than perhaps others. I think this is all about understanding your catchment, knowing who's coming to your centre, why they're coming, and then how do you want to extend their stay? How do you want to attract new consumers? And then choosing the right style of operator to fill your big box or your vacant retail voids that you've got. So this is really actually where I guess Pragma and some of your demographic information is really valuable, because if you're putting in a large unit and they want 30,000 square feet and you've got a combined space, there's considerable costs associated with that. But if you can come along and convince your board internally that it's worth doing because it has a halo effect on the sales of the immediate tenants around, be it F&B, or there's a synergy between the shopper at Nike and the customer at Putt Shack, and that their sales will go up 10% because of including certain brands, then that really helps justify the financials and give you comfort that what you're doing is a sensible development plan. So I think it's great to really important in the social competiting world, particularly to understand the concepts, their business plans, and who they really are appealing to, and the benefits that could have then for some of these big centres.
And I think, Tracey, one of the things that we've talked about quite a lot that's really interesting in the leisure sector is the degree of knowledge that some of the operators have about their customers through the need to pre-book and then the ability to engage with them.
Yeah, it's a great model. You know, you've got people booked for your business. You know they're coming for a 2-hour slot, and then they go on again. But you know everything about it. You know when they've booked from. I'm guessing technology is good enough that you can probably work out whether they've booked online, whether they've booked in a party, are they coming in, you know, small groups of 2, are they coming because it's a bigger corporate event? And then you know where you're targeting for your, you know, your marketing and PR. So actually justifying and understanding the best ways of spending your marketing, which I think is becoming more and more important if you've got to get to a wider catchment and compete with social media and the other types of marketing that probably have come online. It gives you a really good knowledge and understanding. So working with those brands, you know, from a centre management kind of level, and sharing that information and then using it to target the right consumers is really important.
And Jamie, I know you do a huge amount of work with the brands themselves. What are you seeing from their perspective?
Yeah, I mean, I think the data piece has been really interesting and really important over the last couple of years. You know, whether it be leisure or retail, brands have had the ability to collate huge amounts of data through various sort of social media channels or online platforms or through physical stores. And I think what the last 2 years and the pandemic's really enabled them to do is really analyze it and really look at how they can use it to in their best interests. In a retail way, it's really interesting to see someone like Gymshark, who is completely an online digital brand, and they've looked at their data and they've obviously identified a location such as Regent Street for a singular flagship store, and I think it's amazing how much data they've collected, and then so they've used it specifically for that, and then they're engaging with the landlord, sharing that data. And then you can use the landlord's data to also work out who can sit alongside, and sort of that tenant mix and halo effect, as Tracey alluded to, kind of grows off the back of it. Probably more seen with the leisure side in terms of you've got that captive audience. If that information can be shared from both sides, landlords can then see specifically who's coming to their centres and their schemes. And then they can, you can really be accurate when creating that tenant mix going forward, to bring in the retail and the leisure side by side.
I think that data piece is really important. And I think from a letting perspective, the more knowledge you have about your scheme that you're letting and who the consumers are and what other brands that they're likely to attract, and benefit working with in a sort of cluster is vital in going and sort of trying to sell the story of your site and why it's better than taking a site, not necessarily even in the UK, but you're comparing sites here with something that could be in Europe or internationally, because obviously brands are just generally taking less sites. So knowledge definitely is something that we're working really hard to try and enhance within our leasing sort of discussions.
I'd agree. I think that's really critical at the moment. Like you say, Amazon is probably a really good example, particularly with the rollout of 4-star, that you do worry slightly that there's probably aspects of your life that they will know about that maybe you yourself don't. And certainly being able to link that digital behavior with physical behavior through the rollout of Amazon 4-star stores, I think is really interesting in terms of the direction that brands are clearly going. I think what that, as you say, really creates the onus on the landlord, the asset manager, to be able to say, yes, these brands understand their own performance and their own consumers, but how does that fit in to a wider place? And for all the visibility that occupiers and brands have regarding their own performance, they don't typically have that wider context around opportunity, how their peers are performing. And this is really where I think as an industry, landlords and asset managers need to get stronger in terms of presenting that opportunity. I think there's been some great advances over the last couple of years in both improving the accuracy and reducing the cost in terms of quantitative data, be it credit card, debit card, or mobile phone technology. And I think the real advantage that potentially plays is the ability to quickly and robustly understand what people are doing, when they're doing it, how often they're doing it, but potentially should free up some budget to actually speak to people and really get under the skin regarding motivations and behaviors. Ask the question, why? Why do you do that? Why do you think that? Why do you choose to behave in that sort of manner? And I think that's really where some opportunities are available for landlords and asset managers to really get ahead in understanding really what drives performance and opportunity for their specific assets. I think the other change that we're seeing coming forward and need for change is just in the physical environments that we create. So moving beyond attracting the right uses or the right occupiers, I think we need to challenge ourselves as an industry, probably to create more relevant places. And certainly Pragma have been working more in the Middle East and the Far East since becoming part of the Handley House Group and operating alongside Benoy. But I know, Tracey, you picked out a few examples as well of locations that are really creating a reason to come in of themselves.
Yeah, I know we've been working with some futurology experts and a couple of examples they highlighted to me, which I can't wait to be able to travel again to go and see. At the Commons, which is a mall in Bangkok, where 30% of the space is open air and it's dedicated to public spaces. They kind of see the future of this shopping centre is about hanging out. And I guess when you've got very intense sort of levels of people living so closely together, to have those open spaces and have that community feel is more important than ever. So their top floor, I think, is dedicated to sort of areas where there's a kitchen or a lawn and studio spaces that you as an individual could hire. So you and your friends could hire that space for yoga, or you could go and just play music and hang out or do art or dance workshops. It's very community led. And then the other one, which I'm intrigued about, is in Shanghai, and I'm sure I'm going to pronounce this wrong, but it's TX Hahaya. Sure that's wrong, but they also go under the name of the Youth Energy Centre. And that's the first curated retail mall which is dedicated to creating a museum-like environment that integrates technology, innovation, fashion, social interaction, as well as kind of the more traditional. This is purely turnover-led scheme. And from what I can see, it looks like it's a lot of the facilities there offer very much plug and play. So it allows the brand to go in, has the fixtures and fittings almost in place, electricity, Wi-Fi, all those types of services in place, so that you as the brand can turn up, put your product and just start activating it. So they've been targeting the top brands who have grown online within China over the course of X number of years, and targeting those as their tenants. So I think that's fascinating, and something that certainly, in order to try and appeal to a younger demographic, should be something that could be explored in the UK in a lot more detail. So that, and the sustainability credentials, I guess, we're seeing a lot of growth there, and Jack, I know, is sort of seen it a lot within the sort of office market, and it's following now more and more, Jack, I think, into retail, isn't it?
Yeah, certainly. I think, and you know, we were discussing this, you know, as a team yesterday in the last few weeks or so, but you know, the last 18 months has been, you know, there's been a huge progress in certainly the office sector, in our day-to-day world. You know, I think, you know, investors have probably seen about 7%, you know, in progress in retail compared to, you know, 80% in offices. You know, from an all retail point of view, that's, you know, investors, retailers direct, you know, less than 1% of all retail are targeting ESG and sustainability credentials. I think from a landlord point of view, you know, new stores are probably likely to be the only, well, not the only sustainable ones, but, you know, from this point onwards, as we are today, you know, we're coming out of, I don't like to use the word vicious cycle, but, you know, there's been the last 2 years, or certainly before that anyway, you know, there's definitely been an increase in vacancy rate. You know, for your day-to-day private landlord, you know, their main focus is on securing occupation, be it from strong covenants. The way to do that is to offer rent freeze, to offer, you know, service charge caps, and, you know, for your private investor or your private landlord, you know, there's little return on enhancing and targeting sustainability in your ESG rating, you know, day one, beyond probably reduced costs, which then, you know, that just flows directly onto the tenant normally. So, you know, we think collectively, and Andrew and I were discussing this yesterday, we think there's going to be there will be a real two-tiered system. You know, that's between, you know, your institutional landlords who can and are happy to spec, I guess, on risk cost on ESG and their sustainability credentials, versus, you know, your private landlord who is questioning, you know, is it worth it? And I think that's just a point in time where we are at the moment. You know, offices had that 18 months ago. We're probably coming into that stage in retail now. You know, there's good examples of that. You know, we looked at Aberdeen's ownership of the Moor in Sheffield, probably in end of 2020. You know, they had they had a sustainability portfolio or fund. They were able to you know, build a 35,000 square foot very green piece of real estate, which they managed to secure H&M, who were part of, you know, UN Global Compact, who are targeting green real estate. So there was not a nice marriage value, but there was an easy marriage value there. Brixton Market, for example, which we purchased and still manage on behalf of Angelo Gordon, you know, they've got a 110% social benchmark on their ESG rating through community, artists, catering, cultural hubs. So, you know, on exit, there's a market there for investors, institutional investors, who are targeting high ESG ratings. But you compare that to the bottom tier, where you have your smaller landlords. You know, there's going to be a point in time where they need to start speccing cost on their real estate to help their exit strategies from an ESG point of view. But at the moment, it's not worth it. That's the and I don't want to pull the wool over everyone's eyes. I think that's, you know, it's a debate that everyone's having at the moment. You can see it in offices. It's just when will it start filtering through to retail?
I think there's also a real interest, though, from the occupational side, Jamie, isn't there, about the number of brands who are emerging, particularly those younger online brands, who are now only looking for spaces if it is sustainable.
Yeah, absolutely. I mean, I think it's becoming more and more relevant for all brands. Certainly there's a US fashion retailer that we're looking in London for, and they are very, very focused on the sustainability piece. And as a matter of fact, I mean, that they wouldn't consider a building that, they weren't having the same sort of landlord conversations with. I mean, they want their landlord to be very much on the same page as them. So it's been a real learning curve from our perspective, because it's the first time that we've, I suppose, been exposed to a retail brand who are completely focused on achieving, sort of almost a carbon neutral store, and they want the landlord to really be part of that journey with them. And it's not necessarily a large institutional landlord, but even as a private, they really do expect everyone to be really invested into it.
I think that's really interesting as well, where, Jack, you've mentioned Brixton Market from that societal benefit. We're seeing quite a weight of money coming forward in investment, looking at ESE or ESG, and particularly that environmental sustainability. But do you think going forward those societal benefits will be something that is already important for public sector, but will increasingly be important for private sector investment in city centres?
I think definitely. I mean, I think like Brixton's a good example. That is from a real estate perspective. It probably doesn't tick all the ESG credentials from the bricks and mortar, but from societal benefits, they're not easy wins, but there's certainly your day-to-day, your smaller landlords can hit those easy wins by going into like your local community, offering pop-up space. Like Brixton, for example, there was rent-free units where new chefs, new artists could come in and use the space for a week, for 2 weeks, trial out the space. If they liked it, then they could upsize into a more permanent use. And your day-to-day high street landlord can offer that. There's increased vacancy, yes. There's the occupational costs you've got to think about. But even if you have a 2-week void or a year's void, you can tick those ESG credentials fairly quickly, which will help. It will help your exit strategy longer term, I think, from an ESG point of view, given the weight of money targeting it.
I think just from a strategic point of view, though, from a landlord's perspective, incorporating those community uses just attracts more people into the centre, the high street, whatever your ownership is, and is attracting a younger demographic. When the research that we've done showing, what is important to that Generation Z when it comes to a retail environment, community and sustainability are two real key focuses, and that demographic has such a wide pull because they also have the ability of influencing their parents and other generations. So whilst they're still young and their spending power at the moment might not be as high as others, they actually are very influential. So I think it's a really important element that benefits not just the financial side and the investment and your exit values, but actually about getting consumers in to start with, which obviously is then, all part of that cycle to increasing the value at the end. Absolutely.
And I think that rounds us off quite nicely in terms of touching on that sort of consumer right the way through from occupier and investor as well. I'm just wary on time. Just wanted to answer maybe a few of the questions that we've had posted to us during the session, and any that we can't get to, we're happy to follow up on. Where we've presented, I think, hopefully quite a positive opportunity around our UK major city centres going forward. I guess the question that often first pops up is great, which cities offer the best opportunity? Do you have a view, guys, from your own experiences and work?
I guess from an investment value, Jack, you probably have a view.
Yeah, I think Nash, and it probably is, and it will be in line with what you're probably going to say and what Jamie's going to say, but nationally, I don't think, COVID related repricing didn't really differentiate between, I don't think, prime and kind of your average properties. Prime yields have probably moved out 75 to 100 basis points. Rents have then stabilized through concessions. Revaluations have been pretty painful, but we haven't really seen any forced sellers. So we're at a good point in time, and high quality assets that are in good geography, good city centres where there's continued investment. So the likes of, as Andrew said, the likes of Manchester, the likes of Birmingham, good geography, prime assets, we think are really good value at the moment. I think it's definitely going to, we're definitely going to see a quite big inward yield shift over the next 12 months. I say, no one really knows, but those big cities where there's inward investment that Jamie's tenants are targeting, we think are very good buys at the moment.
Well, Jamie, Manchester is certainly on the hit list of quite a few of your tenants, isn't it?
Yeah, no, absolutely. I think traditionally international brands would always focus in on London, and then it would be sort of, they would start their journey as to kind of work out where to go next. Whereas now we're finding in the conversation that they want to do one or two very quickly in London, but they then switch attention, and a lot of the focus has been sort of Manchester way. I think it just offers a really interesting city environment. It's got so many different elements within it, lots of different sort of parts of interest with the different quarters, and it's become a much more internationally recognized city centre. Certainly again from the Americans and the Europeans perspective, and that's both leisure and also retail.
I guess coupled with the amount of people who have over the last few years moved out of London, be it COVID related or because of cost of housing and the sort of the opportunities that are now available in cities like Leeds or Manchester or Birmingham, those probably are going to be the areas that are still commutable for those people who do go back into London for 2 or 3 days a week, but they can live further out. So anywhere within that sort of hour and a half, 2 hour train journey to the capital feels like there's a potential increase in potential turnover because the numbers of people who've moved out of London, but because they've been in their home counties of London, they're kind of expecting that level of experience as well. So I think there's a great opportunity for some of those London brands, and we're seeing it in F&B for sure, who previously only looked at central London or neighbourhoods, now looking at those sort of more bigger sort of conurbation cities, which have got the London consumer has moved to. So the Brightons, the Readings, the Baths and Bristols, and obviously Birmingham and even Leeds, because you can get there, the train service is so quick. So there's definitely a growth from F&B moving outside of London.
Just mentioning F&B, Tracey's one of the questions we've had is around the role of F&B. Given that it is increasingly in demand, people are eating out more often, and a wider range of people are eating out more often. What do you see as the role of F&B in a centre going forward? Is that the opportunity where you can really secure some strong rents, or do you need to use F&B more creatively to drive wider value for the scheme?
I think it's probably a combination of both. The benefit of the 15-20 year lease from an F&B operator is obviously always of interest to a landlord. We're getting some strong rents, we're getting some innovation and some interesting concepts. So I think you can underpin the basics and have those rents in place, but then you can also look at more innovative sort of solutions, be it the food markets, whether it's people who are in, the Bonnie and Wild concept up in St James's Quarter that our F&B team were involved in at St James, and I think that's great because it's celebrating localism. It's bringing in the very best of Scottish produce, and has been trading incredibly well. So I think you have the ability of giving a shot to the smaller independents or the local hero, who I personally think every shopping centre should have, because it acts and helps with that community. helps bring that innovation and touches on some of the points that Jack made with regard to that community and sustainability piece. But then you can also underpin it with, some of more of the larger governance. But I think it's a real good combination of both. So F&B is definitely seen by many as an obvious solution. But I think it is about making sure it's the right F&B for your scheme. And that goes back to where we probably started lots of these conversations about understanding who is using your centre, why they're using it, and where are the opportunities to increase that spend. What's the additional spend that could be secured? And then also, what's the benefit? There's no point in putting an F&B operator in who has no benefit to anybody else in your centre. It has to be somebody who will have a halo effect over leisure or benefit serve a convenience for the office tenants above, or create a facility for the residential you're planning to build. So it's about understanding the F&B, not just putting in F&B.
I also think that in terms of that sector, they're getting so much more confidence, and sort of love it or loathe it, Deliveroo is providing them with an additional revenue stream. It's also providing them with a huge amount of this data that we talked about, that a lot of restaurants, yes, they have the booking service, but they get so much more information about their customer, what they're ordering through Deliveroo, and therefore when they are looking at expanding into the regions, you're seeing a much more aggressive, what would have been considered as a core London offer moving out, because they're so much, they're just very much more confident about what they can do in those locations and that their customer is there.
Yeah, completely agree. And like you say, that sort of data and insight point I think is a key takeaway from today of like you say, really rising to the level of the brands in terms of understanding of consumer and opportunity is absolutely key. I'm aware that we've run slightly over time, so at that point, I'm going to bring today's session to a close. I'd just like to start off by thanking the BGP team for all their thought and insight to this. Very keen to continue to explore topics with them, and hope we can do a similar session later on in the year. Also, just like to thank everyone who's attended today. If you do have further questions, please do feel free to get in touch with either myself or Tracey, Jack and Jamie. We'll send around a link to today's session so that people can access it from there on in, and wish everyone a great rest of the Thursday.
Great. Thank you, Andrew. We really appreciate your time and being asked to join today.